What's up, traders and investors? Welcome back to Elite Trade Club. While Wall Street is busy chasing giants like Nvidia and Tesla, the real smart money is quietly hunting in the shadow, loading up on penny stocks that trade under $5 today, but could explode in value as 2025 unfolds. In this video, we're pulling back the curtain on 5 of the most compelling penny stocks with massive potential upside. Each of these names carries 10x potential, but before we dive in, here's your reminder. Penny stocks are not for the faint of heart. They are high-risk, high-volatility plays, and the rule is simple. Never put more than 1 to 5% of your portfolio into them. So why does 2025 look like the perfect storm for penny stocks? There are 3 powerful catalysts converging at once. First, the Federal Reserve is expected to begin cutting rates, injecting liquidity back into the markets. Historically, periods of easing monetary policy have fueled sharp rallies in speculative assets, and penny stocks tend to benefit disproportionately. Second, the ongoing artificial intelligence boom is trickling down beyond the mega-cap leaders. While companies like Microsoft and Nvidia dominate the headlines, micro-cap AI and semiconductor firms often see the largest percentage gains as new technologies diffuse through the sector. And third, 2025 is an election year in the United States. Election cycles bring heightened volatility and sharp rotations between sectors, which can create hidden opportunities in small overlooked stocks. If you look back at previous easing cycles, especially between 2020 and 2023, penny stocks surged dramatically when conditions aligned. If you look back at previous easing cycles, especially between 2020 and 2023, penny stocks surged dramatically when conditions align. That's exactly the type of setup we're entering right now. Now, let's turn to the 5 elite penny stocks we've identified as top candidates for explosive growth. The first company on the list is a biotech gem trading under the ticker ATXS. Right now, this stock trades at just $1.80. The catalyst driving potential upside here is huge. An FDA decision on their cancer treatment drug, expected in the first quarter of 2025. Why does this matter? Because the biotech space runs on binary events, approval or rejection. A similar drug targeting the same type of cancer was recently acquired by a major pharmaceutical company for $11 billion. If ATXS secures approval, investors could see this stock surge from its current price to well over $15, representing an enormous gain. But make no mistake, the risk here is severe. If the FDA rejects the application, the company could lose 80% of its value overnight, potentially collapsing to just 20 cents. That's the nature of biotech penny stocks. Lottery ticket odds, but also lottery ticket rewards. Next up is UUUU, a critical materials miner priced at $3.50 today. This company specializes in rare earth elements, which are essential for everything from electric vehicles to national defense technologies. The catalyst on the horizon is a potential U.S. ban on Chinese rare earth imports in 2025. Policymakers have been signaling a strong interest in securing domestic supply chains for national security reasons, and UUUU is one of the only North American miners with direct contracts from the Pentagon. If such a ban takes effect, the company could be uniquely positioned to dominate the U.S. rare earth supply chain, potentially sending the stock as high as $30. Of course, the flip side is tied to demand. If electric vehicle adoption slows down or if the ban doesn't materialize, this stock could fall back toward $1. High risk, but a very real and very strong macro catalyst. The third stock on our radar is NLST, an AI microcap currently trading at $2.10. This company is in the middle of a patent lawsuit against Samsung, and the outcome could be transformational. If they secure a win or reach a settlement, analysts believe it could be worth more than $500 million. What makes this even more compelling is that the company's technology is directly tied to memory chips used in artificial intelligence systems, one of the fastest growing sectors in the entire economy. If royalties start flowing in, NLST could easily climb to $20 a share. But like with any legal battle, timing and uncertainty are the main risks. Court cases can drag on for years, and unexpected rulings can derail even the strongest claims. Investors need to be prepared for delays or setbacks before the real payoff materializes. Fourth on the list is SLDP, an energy storage company trading around $1.30. SLDP is working on solid-state battery technology, which has the potential to revolutionize the electric vehicle industry. Their key catalyst is a partnership with Ford, where testing results are expected to be released by the second quarter of 2025. If the tests confirm that SLDP's batteries are 50% more efficient than Tesla's current lithium-ion technology, it could completely shift the energy storage market. Investors would likely revalue the stock to $10 or more. The risk, however, is very straightforward. If research and development fail, or if the testing disappoints, the stock could collapse toward 10 cents. That's the razor's edge companies like SLDP walk on. Transformational technology, but binary outcomes. Finally, we have MIGI, a crypto infrastructure stock currently trading at just 90 cents. Unlike many speculative crypto plays, MIGI is debt-free and recently reported more than 300% sales growth in a single quarter. The catalyst here is the expected boom in Bitcoin exchange-traded funds, which is driving the surge in demand for mining rigs and infrastructure. MIGI sits at the heart of this supply chain. If demand for Bitcoin continues climbing and institutional adoption grows, MIGI could realistically hit $7 a share in 2025. On the other hand, the risk here is tied to the broader crypto market. If Bitcoin enters another crypto winter, mining companies like MIGI would be among the hardest hit, with the stock potentially crashing to just 5 cents. Now that we've covered the opportunities, let's talk about how to trade penny stocks safely. The first rule is simple. Only use mad money. That means no more than 1 to 5% of your overall portfolio should be allocated to penny stocks. The second rule is non-negotiable. Always set a stop loss, ideally around 50% below your entry point. This protects you from catastrophic downside if one of these high-risk plays turns against you. Third, take profits systematically. A powerful strategy is to sell half of your position once you've doubled your money, essentially playing with house money on the remainder. That way, you lock in gains and reduce exposure while still keeping skin in the game. And here's a pro tip that many traders overlook. Watch for insider buying. When you see CEOs or top executives purchasing their stock on the open market, it's one of the strongest signals of confidence you can get. To wrap this up, these 5 penny stocks, ATXS, UUUU, NLST, SLDP, and MIGI, are all trading under $5 right now, but each has a unique catalyst in 2025 that could send it soaring to multi-bagger returns. From biotech breakthroughs and rare earth dominance to AI royalties, energy storage revolutions, and crypto infrastructure booms, the upside is massive. But remember, the risk is equally high. Penny stocks burn 90% of traders who chase them without discipline. Trade small, trade smart, and always know the risk before you press buy. And I'm not a financial advisor. This video is for educational and entertainment purposes only. Always do your research before investing and never risk money you can't afford to lose. If you found this breakdown helpful, smash that like button, subscribe for more stock market insights, and let me know in the comments which penny stock you think has the most potential in 2025. Thanks for watching, and I'll catch you in the next one.